Happy Thanksgiving, Business 630. This is our week number 5 lecture video. My name is Rick Hassey, and today's date is Wednesday, November 24th, 2021. And our week number 5 video this week is concentrating on completing our risk analysis work. You are working on case number 2 this week, due November 28th. I'm going to talk a little bit more about that in just a minute. And we'll be completing our studies going through chapter 11, scenario and sensitivity analysis, keys to determining strategic decision-making into the future for capital investments. Then I have posted your Business 630 assessment case. It's called the Electrics Incorporated. This case is due on Sunday, December 19th. It is a multiple file presentation of individual work, an APA paper, and a spreadsheet analysis, fairly similar to your case number 2 that you're working on this week. And I'll talk about that in a moment. I'd like you to download those files of that case and at least read them this week. And then every week going out through the remainder of our course, we'll be looking at that case as you're working on it, in addition to your other work throughout the balance of this session. Next week, we're going to be talking about financial statement analysis and forecasting capital requirements. Chapters 3 and 12 will be using the companies that you have selected, which you did some work already in case number 1. We'll be doing some additional work with that in case number 3 next week, which will be due December 5th. So needless to say, as we head into the Thanksgiving weekend, in regards to Business 630, there's a lot of work to do. There'll be no student hours this week, which are usually scheduled for Thursday, November 25th. There'll be no student hours this week. I will be available all weekend and part of Friday. If any of you have would you like individual Zoom sessions or individual court questions involving case number 2, all you need to do is post to the discussion forum. I check that every morning. Send me an email, send me a text if you want to have questions or if you want to have a Zoom session to go over any issues. So no student hours this Thursday night, Thanksgiving night, but I will be available for questions and any conferences that any of you do need in completing this week number 5 work. We're halfway through our course and plenty more left to do. I hope you're all enjoying the course, getting some value out of it, and in dealing with this platform that we're in. I hope it's all well. I haven't heard from a lot of you, but a lot of you are doing very well in our work thus far. So anything that you can comment to me confidentially about the course, if I'm doing something wrong, if I could do something better, please let me know. It has no effect on your grade. I welcome the feedback. I welcome if I'm not creating value for you in this course. So please let me know. I appreciate positive and negative comments. Any way I can help this class be better. So let's take a look, first of all, at what we're working on in regards to case number 2 and finish up that discussion that we cleaned up last week in week 4. Okay, where we left it last week, we completed the capital budget analysis. The steps of the capital budgeting process to what is our asset investment, what's the depreciable life, what's determining the net income, revenues and expenses from the variables given, determine the net project cash flow, taking into account depreciation, working capital and salvage value, then determining the return analysis in dollars, net present value, in percent, internal rate of return, in ratio, profitability index, and in years, payback. And then finally, which we concluded week number 4 with, risk analysis, different scenarios of output at certain probability rates, and sensitivity analysis, which takes individual variables of the case or of the project and determining their effect on the outcome of net present value. And we looked at a problem last week where you were to determine the weighted average cost of capital, then put together a base case analysis to determine those 4 return calculations, dollars, percent ratio in years, taking into account working capital, taking into account inflation rate, all different kinds of variables where a capital budget investment is made. And is this projected to prove profitable, give us an adequate return based on our cost of capital? Remember, the definition of cost of capital is what it's costing us at this given moment based on the capital structure of our company. What is the current percentage of cost based on after-tax cost of debt and the expected return on by our stockholder investors, basically called the cost of equity. And then we finished up the week with the risk analysis side of taking that base case and adjusting in scenario different output amounts in units where all the other variables stay the same. The output in units change, and that is weighted based on the probability determined by this company and their probably public accountants, the probability of that occurring, and then have a weighted net present value profitability return based on those different scenarios. Then we did a sensitivity analysis. We did a video explaining that, where we take different variables that's so selected. In this case of this example, it was selling price per unit, variable cost per unit, and the weighted average cost of capital, and alter those units individually by a certain degree of deviation in percentages. In this case, it was 15, 10, and 5% plus or minus. And by changing those individual variables one at a time, what would be the resulting net present value? And that resulting net present value gives us a range of deviation or a range of change based on those types of variables and how they change over time. As you can see in the example we did last week, the most sensitive variable, the variable with the greatest range and the greatest slope in the line, is naturally the selling price per unit. The other variables or the other variables of choice were variable cost per unit. Notes that's the green line with a slightly less slope, and the weighted average cost of capital. So by doing this analysis, we can take a look, first of all, is what we think is going to happen, the base case. This is based on our history, our culture, the way we know our market, the way we know our customers. This is what we think will happen with the amount of services or products that are going to be produced out of this investment at a certain cost at ours in the market of the weighted average cost. This is what we project the return. Then we add another layer to that analysis of what happens if certain things change. Output levels change due to the nature of the economy or the conditions of the market in our industry change. Also, we take a look at sensitivity. What variables in our analysis, if we alter those independently, how do they affect the overall profitability of the venture? And these scenarios and sensitivity analysis or risk analysis give us an idea as a manager strategically as this case or as this project goes forward into its depreciable life in the future. We use this as a gauge when the actual numbers come in. If any of you remember back to your accounting days, it's called variance analysis, taking a look at projected budgets compared to the actual numbers. Well, then as this budget or plan that we accepted to make this capital investment goes forward, when we get the actual numbers going into the future, if we begin to see trends in the amount of units we sell per year change, or if we see trends in order to meet those demands of output, do we have to alter the selling price? Do our costs change over time due to new labor contracts or inflation rate, more inflation than we originally budgeted in this problem? And also, do our cost of capital changes? Does our cost of doing business in that particular area of the country, due to our risk in the market, due to demands of investors, how has that changed over the course of time? So all this plays into part into the future strategic implementation. I need some turkey. Implementation of, as the actual numbers come in, as managers, do we need to adopt strategies that alter these changes we see going forward? So this is huge when it comes to financial management of assets. of as companies decide to invest in assets to produce certain returns to pay back their investors and grow the company, if these projects go plus or minus, yay or nay, pro or con, can we make strategic decisions knowing key variables, knowing scenarios that we've built into the original analysis, and can we make these changes? This will lead us into the electrics case, which I will now discuss. So in case number 2, this is what you're doing. In case number 2, you'll be looking at basically the same type of format involved with what we've talked about in class, where I give you project inputs. Based on the information you have, you are to determine the weighted average cost of capital based on the capital structure estimates I give you, based on the risk interest rate on debt, based on the risk-free interest rate, based on the market premium rate. I note that's the market premium rate, and based on the firm's beta. Put all that into context, you can develop their cost of capital, which will be your discount rate. And then you are to put together a capital budget analysis going over 7 years of an investment of $700,000 with the fully depreciated over those 7 years with an ending salvage value or disposal value in year 7 of 55,000. That's with a working capital base of 8%, with inflation rates for selling variable cost and fixed costs, a tax rate of 20%, projected units sold every year, selling price per unit, fixed cost, manufacturing cost per unit. Put together that base case and determine the 4 methods of return: NPV, IRR, profitability index, and payback. And you have the templates and a variety of examples that we've discussed and have been posted to Blackboard. Then I want you to do a risk analysis with these changing outputs. There's the base case, which you've already done, and then different outputs for best case scenario and worst case at those probabilities. Then do a sensitivity analysis based on 3 variables: selling price per unit, variable cost per unit, and a different one from our examples, fixed costs, at a proposed percentage changes of 15, 10, and 5, plus or minus. So 2 tabs, or basically 3 tabs in your answer. The first tab in your spreadsheet will be your weighted average cost of capital analysis. The second tab will be your base case analysis, and also you can include your scenario analysis on the same tab, or have that risk analysis on another tab, like we did in our example, where the scenario and the sensitivity analysis are separately. But that's what I want to see in your work for case number 2 due this Sunday. Spreadsheet, no PDF, a spreadsheet. If you give me a PDF file, you will get a 0. I need to see a spreadsheet with the calculations, and you need to alter that spreadsheet, leaving out no traces of the template that I gave you earlier. You can adapt the variables and change all that, but I don't want to see a 10-year analysis. I want to see a 7-year analysis. I don't want to see any of the remnants of the example that I gave you. It should be all created for this particular case. The only other addition to the work I want you to do is, when you finish this investment analysis, simply give me a yes or no. Do you approve of this investment for this company? That's the only thing you have to do written wise on this case in your spreadsheet, is just give me a simple yes or no on your approval, your interpretation of your work, and is it a satisfactory investment for this company? That's what I want you to do for this week's case number 2. And finally, this week, number 5, I want you to download and just review. If you want to start on them, you're more than welcome, but download and review your individual Business 630 case assessment case for the Electrics Corporation. This is part of the program of the Executive MBA program that you're in. Part of our accreditation is to have certain courses with certain assessment examinations or papers that you have to complete in order to satisfy the requirements of your MBA degree. In this course, Business 630, we are one of those assessment courses. In this case, the Electric Incorporated is your answer to that assessment case for this MBA X program. So if you go to your Blackboard, there's a new file folder set up for the Electrics Incorporated case, and there you'll find a variety of different folders. You'll find a PDF and a Word doc for 2 of those folders. It's all the same folder. I just gave you in different presentations a PDF or a doc. First of all, the assessment case, which explains the case and gives you all the necessary questions and variables to put together. Then I give you a rubric explaining to you how I will be grading and looking at this case. And then finally, I give you a sample case paper. Now, this sample has nothing to do with this Electrics Incorporated case, but it does give you an example of an APA format case assessment paper, so you can use that as a tool to see how you are to write this. Now, over the next 3 weeks, I will be spending every week in video explaining certain aspects of this case, having student hours on Thursday to help you with this case, even having some special special Saturday session. Probably will be December 13th. Saturday, December 13th, a Saturday morning session for any students who want some extra discussions with me to go over the case. And I will post that link in the next week or so. But we will have special session on Saturday for any students who want to help on this work. So my duty or task to you this week is to just download the assessment case paper information, the rubric, and read those over. Take a look at them this week, see what you have to do. It's basically making a decision for a company that has to choose between 2 products. You're going to have to do a capital budget analysis, a review of their market, review of their culture of their company, and put together an analysis answering those 9 questions that are given in the case. And we'll talk more about that next week, but I urge you all to start looking at this case this week over the Thanksgiving weekend. Case number 2 should take you about an hour to do. It's not that much. It's not that much as long as you follow the template and the work that we've been doing. Spend some time this weekend on downloading and reviewing this Electrics Incorporated. Make notes, see what you have to do, see what you know and don't know of the information given. I don't know what Mr. Hassey's doing here. Come prepared with those open item questions. I hopefully will answer them next week. And you can also ask me these questions as you get into the case. But I can't stress enough to begin this work pronto. All right. So that's our lecture video for this week. Pretty much going over our capital budget risk analysis that you're doing in case number 2, introducing the Electrics Incorporated assessment case, and beginning to set the strategies of going forward into this course next week when we look at financial statement analysis and capital budgeting requirements, which we'll do with using our companies that we've selected earlier in this course as a guideline, as a reference point for this analysis. So thank you, everybody. Have a great Thanksgiving. Be safe, be well, enjoy the time. And if you need any help or questions over the weekend, I'm available. Thanks, everybody. We'll talk to you next week. Adios. Oh, by the way, there's no Friday video this week. No Friday video as well. So sorry I jumped ahead there. There's no student hours on Thursday, and there's no Friday update video this weekend. The next video I have for you will be on Monday, November 29th, introducing case number 3. Have a great weekend. Adios.